So hello everyone, how are you all? I hope all are doing very much good. Today we are going to cover in this lecture essay 200, 210 and the 230. Okay, let's start with the essay 200. What it say? Its name is Uya Casa. O-O-I-A. Uya and Casa. C-A-S-A. So it means overall objective of an independent auditor and conduct of audit as per the standard on auditing. Right? We call it Uya Casa. Now, what is the objective of auditor? You are doing CA and your objective is to become chartered accountant. Okay. In the same way, a auditor is doing the audit. So what is his overall objective? See here. To obtain the reasonable assurance. Right? To obtain the reasonable assurance. So it means around 90 to 95%, not 100%. Why? Because of inherent limitation of the audit. Is it clear? Now, whether the financial statements as a whole, we need to check our financials as a whole, whether they are free from the material misstatement. Now, what do you mean by the misstatement? So, what the FRF says and what our financial says, the difference between the two is the misstatement. Okay. What treatment AS, Ind AS and the Schedule 3 talks about, and what treatment is done in our financial. Treatment done in our financial. The difference between the two is the misstatement. So what is the material misstatement? Okay, as we see in last lecture that 5,000 rupees for Ambani is not material. Okay, so what is material? It depend upon the what effect the economic decision of the user of the financial statement. What effect the economic decision of users of financial statement. That would be material. Okay, that would be material. Or it depend upon the also professional judgment of the auditor. Is it clear? Now, this material misstatement can be due to fraud. That is intentional. That is done knowingly. We call it fraud. Or error. That is unintentional. Means गलती से mistake हो गई है. Right. Plus, to report on the financial statement as per essay 700. Okay. And communicate as required by the standard on auditing as per the auditor's finding. So this is the objective of an auditor, to obtain the reasonable assurance around 90 to 95%, whether the financial statement as a whole are free from the material misstatement, either due to fraud or error. Plus report on the financial statement as per essay 700. This is clear. Now, under audit, we are auditing the historical financial information. Right. We are auditing the historical financial information. Historical financial information. Is it clear? Right. Now see here. So whether a auditor can give his assurance about the future viability of the management? No. Remember that auditor opinion does not assure the future viability of entity nor its efficiency or effectiveness with which management has conducted the affairs. Take an example. That company turnover or sale is increasing at a rate of 10% every year. Whether the next year that sale will increase in same percentage? No. We are not giving any assurance on this. We are not giving any assurance on this. Any assurance on this. Okay, we are just verifying the historical financial information, that is past, that is last year information. Okay, now this can be asked in exam. This is the favorite question for the CA Inter IC exam here. Question can be asked in CA final also. Okay, right. Now reasonable assurance is a high level of assurance. Reasonable assurance is a high level of assurance to reduce the, okay, it is around 90 to 95%, not absolute. Say yes. Okay, now to reduce the audit risk to an acceptable low level. What does it mean? For this you have to wait for around 10 minutes. Okay, you will understand this in detail. Wait for 10 minutes. Okay, now that reasonable assurance is not a absolute assurance. We know that it's around 90 to 95%. But what is the reason? The reason is the inherent limitation of the audit. Inherent limitation of the audit. Because the audit is not an investigation. Also we do sampling, we are not checking everything, and there is also time and cost is limited. Time and cost is limited. Right? The time and cost is also limited. These are the inherent limitation. We cannot remove these limitations. Okay. Now, due to inherent limitation of the audit, there is an unavoidable risk that some material misstatement of financial statement may not be detected even though the audit is properly planned and performed as per assets. So these are the some limitation. These cannot be avoided. These are unavoided risk. Okay. This is not in control of auditor. This is not in control of auditor. This is clear. Now, however, the inherent limitation of the audit are not a justification. This line is very, very important. However, the inherent limitation of audit are not a justification for the auditor to be satisfied with the less than persuasive audit evidence. So, a auditor cannot hide himself behind the, see here, it means persuasive means any ठोस evidence in Hindi, पक्का evidence, and you can say in English believable evidence, believable evidence, believable evidence, or you may say a convincing evidence. Okay, a convincing evidence, convincing evidence. Okay, that inherent limitation of audit are not a justification for the auditor to be satisfied with the less than the convincing evidence, means persuasive audit evidence. So a auditor cannot hide himself behind the curtain of the inherent limitation. So a auditor cannot hide himself behind the curtain of the internal inherent limitation. So he have to collect a persuasive audit evidence. Okay. Now, when they are doing the audit, they need to do more work, but they said no. There is some inherent limitation. We do not check more. No, they have to always collect a persuasive evidence, that is convincing evidence. Okay, they cannot hide themselves behind the curtain of the inherent limitation by saying this they are inherent limitation. Okay, they always have to collect a persuasive audit evidence, that is a convincing evidence. This is clear. Okay, now inherent limitation of audit, how they arises. देखिए हिंदी में लिखा हुआ है कुछ भी कर लो मिटा नहीं सकते. you can never remove these limitations in any way. So what are these? These are the nature of financial reporting involve the judgment by management based on the facts and the circumstances. Example is accounting estimates. Okay, that financial statements involve lot of judgment that is made by the management. Okay, like depreciation. It is decided based on the how we use that machine in future every year. Okay, but what we fix, but the actual consumption is not the same, so it will create a misstatement. Also we need to create a provisions for the doubtful debts, provision for the warranty and claims. Okay, so everything is based on the judgment. That financial is made on the basis of judgment made by the management. So there is high risk. These are the inherent limitation of audit. Okay, the second thing is the nature of audit procedure performed directed toward the obtaining the reasonable assurance. Okay, directed toward the, so it means we are doing the sampling. Okay, we are doing the sampling, we are using the probability theory, we are not doing any investigation. That audit is not an investigation. Okay, see here. So after completion, third point is pending, that need for the audit to be conducted within a reasonable time and reasonable cost, and our time and our cost is also limited. Okay, there are three reasons for the inherent limitation. See here, there are mainly three reasons for the inherent limitation. In Hindi lecture I taught the student in this way that because of inherent limitation, जो ऑडिटर है उसकी जीत नहीं हो पाएगी, जो ऑडिटर है उसकी जीत नहीं हो पाएगी. JIT, जीत in English means winning, win. He can never win 100%. जीत 100% नहीं हो पाएगी. Because of inherent limitation, that auditor cannot win 100%. He can win 95% or 90%. That is our reasonable assurance, but he cannot collect a absolute assurance. So because of inherent limitation, he cannot win. ये जीत नहीं सकता 100%. Okay, in Hindi means जीत. So J, then I, T. So these are the inherent limitation, that judgment involved in making the financials. The second is that audit is not an investigation. We are using the sampling techniques. The third one is the time and the cost both are limited here. So because of inherent limitation, that auditor जीत नहीं पाएगा 100% in Hindi. Okay, he cannot win 100%. JIT is memory technique here. JIT. Remember this. Now, and there is a question. See here. After completion of the audit, that audit report submitted by the auditors. Okay, that fraud pertaining to the inventory came to light subsequently, and the auditor were asked to make a submission as to why the audit failed to identify the same fraud. Now auditor submitted that because of inherent limitation of the audit, it is not possible to get the persuasive evidence of certain matters like fraud. So what the auditor is doing here, they are hiding themselves behind the curtain of the inherent limitation and not collected a persuasive audit evidence. That is totally wrong here. Okay, also discuss the certain subject matters or assertions where it is difficult to detect the material misstatement due to potential effect of the inherent limitations. Okay, see here. The answer is here. First, you have to explain the point number 1 and 2. These are the basic point. First says that these inherent limitations are the unavoidable risk. The second point is about that auditor cannot hide himself behind the curtain of the inherent limitation. This is not a justification for the auditor to be satisfied with the less than persuasive audit evidence. Here persuasive means convincing evidence. Okay, convincing evidence, pakka evidence. You can say a solid evidence. Now, then this fourth point you have to explain. See here, this is the key point in this question. Also discuss the, first you have to explain these 2 points. These are the basic point. Okay. Then explain this 4th point. Why this 4th point? Also discuss the certain subject matters or assertions. So what are the assertions? Wait, we will understand in detail. What are the assertions? Wait. So subject matters or assertions where it is difficult to detect the material misstatement due to potential effect of the inherent limitation. Which are the matters there it is difficult to detect the material misstatement? So these are the matters. These 4 are the matters. Okay, same it written here. Now, number 1 is fraud involving the senior management. Okay, first understand what is the meaning of assertion, then we will cover this question. Okay, come here. So what are the assertions? What are the assertions? Understand this. So what are the assertions? It means that management, in Hindi it means दावा. जो मैनेजमेंट है वो दावा कर रही है. Just like I am asserting that this magic book made by me, it covers the entire question, all the question and all the concept in just 280 pages. Okay, you need not to see any question bank. This book is enough for your first time and last time revision. Okay, this book is enough. So I am asserting that. I am making a dawa. I am claiming that. So here it is means that assertion means that management is claiming that financial made by them. See here, that management is asserting that financials made by them include the CEVOP, CEAVOP. That financials management have made include the CEVOP, means that financial are complete, that all the transactions recorded in it, right? And all the transaction it shows the creditors and the debtors all are in reality exist and transaction actually occurred. We have not passed any fake entry. That management is asserting that, management is claiming that, and auditor need to check the same. Auditor is need to check the same. Need to check the same. Okay, this is clear. Now, that financial are accurate, their calculation is proper, their valuation is proper, and the obligation and the rights are proper, means that building, that machinery are in the name of company. Okay, and the presentation and disclosure is okay. They are asserting that, they are claiming that management is claiming that. Now the auditor is need to check the same in his audit. These are the assertions, that claim made by the management. Is it clear? Okay. Now these assertions are at the 3 levels. Number 1 is transaction and the event level. Primarily this is for the income statement, that is our profit and loss account statement. Okay, and the second one is account balance level. This is for the balance sheet. The third one is presentation and the disclosure. This is for the whole financial statements. Now take an example for the completeness assertion. Income statement for the profit and loss account. Profit and loss account. Okay, see here. The primary concern is that all the transactions that have occurred have actually been recorded in the income statement. For example, that the audit team should focus on whether all the expenses have been recorded. Now here we are checking the completeness of the expenses. Whether all the expenses have been recorded or not. So how to check this? We will trace the invoices to the general ledger, whether all the invoices are recorded or not. Okay, now we will trace the cash disbursement for those invoices from the general ledger to check whether these are complete or not. Okay, these are the completeness assertion, that all the transaction, all the expenses have been recorded properly in the financial statement, in our profit and loss account. This is clear? Okay. Now come back to magic book. We are reading this question. This is this answer. We'll continue with this. Now write first point and second point. These are the basic point. Okay, that the inherent limitation is an unavoidable risk. The second is that auditor cannot hide himself behind the curtain of the inherent limitation. This is not a justification for an auditor to be satisfied with a less than persuasive audit evidence. That means a solid evidence or a convincing evidence. Convincing evidence. Now, there are certain assertions, okay, or subject matters where it is difficult to detect the material misstatement. In these cases, it is very difficult to detect the material misstatement. So what are these cases? There are the 4 cases. Number 1 is fraud involving the senior management or the collusion. Means senior management is involved in the fraud, or everyone is involved in the fraud. Even the PN, all are involved in the fraud. Okay. So now it is difficult to detect the material misstatement due to inherent limitation. In these 4 cases, number 1 is fraud, when there is involvement of the management or all are colluded here. The second is the existence and the completeness of the related party relationships or transactions. We call it RPT. Okay. I watch many time Shark Tank India. Okay. Many people come here for the raising the funding. Okay. They say that they are selling a product. But for its manufacturing, they are selling a product. They came in the Shark Tank to raise the funding. They are selling a product. But for manufacturing that product, they created a separate entity. For manufacturing that product, they created a separate entity. Either it can be their subsidiary or parent company or a separate entity. Okay. Now the first condition of the sharks to give them money, to give them funding is they should be merged. They both should be merged. Only then they will invest in that entity. Why? Because there is high risk. There is high risk for the existence and the completeness of the related party transaction and relationship. There is high risk for the fraud that cannot be detected easily because of inherent limitation. Okay. So their first condition is to merge both the entity. Only then they will invest in that entity. Is it clear? Okay. The next is the occurrence of the non-compliance with the law and regulations. Okay. See here. As per SA 250, there are 2 types of laws. That laws having the direct impact on entity, and there are other laws. So for laws having the direct impact on the entity, for that auditor has to take a proper evidence, but not for these. So that's why there is some law and regulation that cannot be their compliance, that cannot be completely detected. That will affect their future going concern. Now, the 4th point is about the future event or conditions that may cause the entity to cease to be continue as a going concern. Okay. Future is uncertain. Okay. In future, any condition or event can be happen, just like Corona, COVID-19. Okay. No one knows about this. Okay. So any event condition that may happen that can affect the going concern of the entity. So these are the 4 points that are difficult to detect. Okay. So how to learn this? See here. In India, most of the people are fraudulent. in the central India. Just for the example, just for the learning this, okay? Don't take this seriously. So in India, most of the people that do fraud are in central Haryana, central India. So whenever a event is conducted by the CRO student, CRO event, student having the CRO number, CRO event. Whenever a event is conducted by the student having the CRO number, then there is high risk for the material misstatement, because that people living in the central India, they do most of the frauds here. Okay, so CRO event. Under these cases, it is difficult to detect the material misstatement. So C means collusions, R means related party, and O means occurrence of the non-compliance with the law and regulations, and event means events. So CRO events. In these cases, the risk to detect the material misstatement is very high. Okay, due to inherent limitations. This is clear. Okay, you can learn this by using this memory technique. Now, see the next question. So what does reasonable assurance mean? What do you mean by the reasonable assurance? Which assay required the auditor to obtain the such reasonable assurance? That assay is 200, right? It is the possible to give absolute assurance. No, it is not possible. So you have to answer this by writing the assay 200 number and its name plus its objective. Okay, this one is number, is name, and its objective. This one you need to write here first of all. After that, explain the main point 2. That is our this point, from this to this. Main point is that reasonable assurance is a high level of assurance to reduce the audit risk to an acceptable lower level. Okay, we will understand this also. Wait for this. Now, reasonable assurance is not a absolute assurance. Okay, explain this. Now, explain the main point third. A main point third. This one. Okay, it includes the this point also, but not explain the this fourth one that we answered here. CRO event. Only these three need to explain. Means this name, this number, this objective, this second point, and this third point till here. Till here. Okay. Now, because of inherent limitation, he cannot win. He जीत नहीं सकता 100%. Okay, because there is judgment involved. There is it is not an investigation, and the time and cost both are limited. This is clear to you 100%. Okay. Now, okay. See this fifth point, last point before that. Concept of professional skepticism and the professional judgment. Okay, understand this. So what do you mean by the professional skepticism? It means an attitude that include a questioning mind. Being alert to the conditions that indicate the misstatement. So auditor should have a questioning mind. Whatever management asking to him, he should not believe them blindly. He should question why management is asking this. He should question why management is asking this. Is it clear? And being alert to the conditions that indicate the misstatement due to error or the fraud. Okay, should be alert during the audit. So, and a critical assessment of the audit evidence. So whatever evidence he find, he should analyze that. What are its possibilities? How it can affect our financial and which area? Okay, critically analyze the same. Should be alert with respect to what? Alertness is required to with respect to that fear. That alertness is required with respect to fear. F mean here fraud. E means evidence contradictory. That audit evidence are the contradictory. See here, that management many times try to enter the false salary in the financials. Okay, why? To reduce their profit and thereby reduce their tax. Okay, they are trying to enter the false salary by claiming the false salary. Now auditor check where is the employee, there is no employee there, they are claiming the false salary here. That management asks auditor that he is on holiday because his mother health is not good today, she is admitted in a hospital. Okay, now the auditor contacted that department employees and they said his own health is not okay, his kidney and liver are not okay from the last many days. Now management is saying his mom is not okay and his friends are saying he is not okay. So there is a contradiction between the evidence, there is a contradiction, so there should be something wrong. Okay, so should be alert to the fear. First is fraud, second is audit evidence are the contradictory. Okay, the next is A, means audit procedure. When procedure to perform, should be alert to that. And the reliability of the document. Okay, that auditor many times require to check the truthfulness of the documents. Okay, many times auditor asks to management for original document. Text example that he asked management to give a certificate that entity get from the bank for making the FD certificate. Many times that management invest that money from other work and show the auditor a wrong certificate, a false certificate. So in that case, auditor need to check whether these documents are reliable or not, whether these are original or not. That management showing to him. Okay, should be alert. So it means an attitude that includes a questioning mind. Okay, does not blindly believe whatever the management is saying. Okay, question everything. Why? Being alert to the condition that indicate misstatement due to fraud or error. Should be alert to the fear. Okay, and a critical assessment of evidence. What are the possibilities because of this evidence collected? Is it clear? Now the next is the professional judgment. Okay, in our example, in the basics lecture, that girl is giving a disclaimer of opinion. That boy has came from the Australia. She know nothing about him. That girl knows nothing about him. Now she is giving her opinion. Okay, now she is giving her opinion and she is giving disclaimer of opinion that if there is any fault in his personality, that will spread in his whole personality. That will be in his whole personality. Whole personality. How she is saying that? Tell me. She is saying that if there is any fault, that will be in his whole personality. How she is saying that? How she is giving this opinion? On the basis of judgment. Okay, here her professional judgment is involved. Okay, what does that mean? Or auditor is selecting a materiality. It is also based on his judgment. What procedure to perform, at what time, it is also depend upon his judgment, his professional judgment, right? So what is the meaning of this? It means application of the relevant kit. Kit means knowledge you are gaining now. Audit, FR, AFM, IDT, DT. His knowledge, his bookish knowledge, his experience, his past experience of that entity or other entity for which he have done the audit till now. And his training, his articleship, 3-year or 2-year articleship. Okay, Based on this, he should decide what to do, provided by the auditing and the accounting ethical standard for making the informed decision. This is clear? Okay. Now, understand the audit risk. This point is very, very important. Understand this. Come here. Now, they are a audit risk. What does it mean? How to calculate the audit risk? Okay, see here. So, there is a inherent risk, then there is a control risk, then there is a detection risk, then these became a audit risk. So, what is the meaning of the inherent risk? See here. Inherent risk mean that risk before risk of misstatement, statement before any control applied by the management. Applied by the management. It means that risk of misstatement before any control applied by the management. These are the inherent risks. These are the business risks that is inherited in that business. This is a business risk. Before applying any controls. See its example. What it means? Inherent risk. It includes the high volume transaction. That entity for which you are doing the audit, it has high volume transaction. These are the inherent risk. High cash transactions, large amount of estimates, complex transaction. So all these are the inherent limitations without applying any control before starting the audit. These are the inherent risk. Okay. Then to mitigate this inherent risk, management applied the control. So to mitigate this inherent risk, that there is a large number of complex transactions, there are large number of transactions, and there are many cash transactions. This is the inherent risk in that particular business or industry. This is business risk. To remove this risk, to avoid this risk, management applied a number of the controls here. But that control are not able to remove this risk. Then it is a control risk. Management apply a lot of controls to remove this risk, but that control are not able to control applied by management. Control applied by management are not able to remove the inherent risk. That will be the control risk here. Okay, that will be the control risk here. See in our question. Here, question is given that compute the overall audit risk. Okay, also connect with this. Also connect with this. To reduce the audit risk to an acceptable lower level. How to do this? Okay, see here. That if looking to nature of the business chances that 40% bill of services are defalcated. That 40% bills of services are defalcated. These are the inherent risk in that business. There is chances that the 40% of the bill of services are defalcated. This is the inherent risk. These are the IR. Okay, this is 40% in our case. But now they say management apply control to remove this risk. That management assured that internal control can prevent such defalcation to 75%. Now management saying by applying the control we can remove that risk to the 75%. Even though 25% risk remain. That is the control risk. That is the control risk. Okay. By applying the control they can able to remove the 75% risk out of 40%. Then 25% remain. Now When we multiply this will become risk of material misstatement. This will become risk of material misstatement. We also call it ROMM. In short, risk of material misstatement. That inherent risk is 40%, that our control fails to remove this risk, that is 25%. So 40% to 25%, it will become 10% here. Okay, it will become 10%. So 10% of bill will not be the risk of misstatement in bills. 10% bills are not removed by that control applied by the management. This is the risk of material misstatement. That is 10% in our case. Okay, see here. So what are the control risk? We call it DOT. Whether the control applied by the management are designed properly, are operating properly, are throughout the year. If they are not working throughout the year, just working for the 2-3 months, it will create a risk, control risk, and these are not operating properly, not designed properly, then it will create a control risk here. Okay, means DOT is not complete here, DOT is not here, then it will create a control risk, that is 25% here, then it is 10% our ROMM here. Now this is our risk of material misstatement. What it means? It means risk before applying any audit procedure, before start of audit. Risk before start of audit. This is the risk of material misstatement, ROMM. Okay, now we need to apply the audit procedures to reduce this risk to the acceptable lower level. Detection risk reduced to acceptable lower level. How we can do so? By performing the audit procedures. By performing audit procedures. This is clear to you, right? Okay. Now, see our question. What it says? It says that auditor assesses that the procedures he could apply in the remaining time to complete the audit gives him the satisfaction level of detection of fraud or error to extent of 60%. It means even he apply the audit procedures, he is not able to get assurance on the 100%. That 40% remaining here. This is the detection risk. Okay, see here. That 100% minus 60%. That 40% remaining. This is the detection risk. Now, ROMM into DR. So 10% into 40%. That will be the 4% here. Okay, this is the audit risk. Here. Okay, see here. Now, that inherent risk into control risk, it became risk of material misstatement. So what do you mean by the inherent risk? This is the risk before applying the control by the management. Example is the high volume of transactions, cash transactions, large amount of estimates, complex transactions or economy, etc. And the control risk is that control applied by the management is not designed properly, is not operating properly, is not throughout the year. So when we multiply the control risk and the inherent risk, it became risk of material misstatement before applying the any audit procedures. Okay, now this is high, this is our ROMM. Now to reduce this, we apply the audit procedures, acceptable level of detection risk. So we apply the audit procedures that include the substantive testing, that confirmations, footing, recalculations, inspections, tracing, watching and the observations. We increase our procedures to reduce the audit risk to acceptable lower level. Okay, this is clear. Now see here, that audit risk is the balance between the ROMM and the detection risk. Okay, this is the risk remain. Risk remain after applying the audit procedure. Risk remain after applying the audit procedure. Audit procedure. This is clear? Right. Now, what is the relation between the audit risk and the materiality? So there is a inverse relation. There is a inverse relations. Now, higher the materiality, lower the audit risk. See here, higher the materiality, lower the audit risk. Lower the audit risk. Why? Why there is a inverse relation between these two, that materiality and the audit risk? When we increase our materiality, we reduce the amount we check. Okay, when we increase our materiality, we increase our materiality to 5,000. Okay, see here, this is technical point. When we increase our materiality, that amount get reduced, not increased. That amount get reduced. Now 5,000 rupees is our material for us. That 5,000 rupees is material for us. Our materiality is increased by reducing the amount. Now we are checking for every transaction for 5,000 rupees. Now our audit risk get reduced. It get reduced. When our materiality increase, our audit risk get reduced. Or see here, when our materiality get reduced. Now, when our materiality get reduced, we increase the amount. Now our material amount is 5 lakh rupees. Okay. Now this is high. Now that audit risk is high. Audit risk is high. Because we are ignoring the misstatement below this amount, below the 5 lakhs. Now the audit risk is high here. So there is an inverse relation between these two, audit risk and the materiality. This is clear to you? Okay, 100%. Okay. Now come to our question in our magic book. See this. How to present in the exam this answer. That what is the meaning of risk that the auditor may give inappropriate opinion? What is the meaning of the audit risk? It is the risk that auditor may give inappropriate opinion on the financial statements which are the materially misstated. So it has two components. Okay, one is the ROMM that include the IR into my CR and into my detection risk. So audit risk equal to my IR into my CR. It became ROMM into my DR. IR means risk that the misstatement, I repeat, risk that the misstatement in the account, balance, class of transactions, disclosures before considering any internal control. That is 40% in our case, that bills are defaulted. This is our risk before implementing any control by the management. This is the inherent risk. Now, management applies the control, but risk that there may be chances of material misstatement even if there is control applied by the management, because these control are not designed properly. These are not operating properly. These are not throughout the year. That is not here. So management can remove the risk up to 75%, then 25% still remain here. This is the control risk. When we multiply this, we got the ROMM. That is it is the anticipated risk that material misstatement may exist in the financial statements before start of the audit. This is the 10%. Okay, that chances of material misstatement are reduced to 10%. Okay, earlier it was 40% before control. After control, it are reduced to 10% when control applied by the management. Now, the next is into detection risk. Risk that material misstatement remained undetected even if all audit procedures are applied. That is 40% now in our case. Okay, now multiply this with this, we get 4%. Now the overall audit risk can be reduced up to 4%. This is the risk that auditor may give an inappropriate opinion here. Okay, for 4% that portion he is not able to get comfort. Okay, this is the audit risk here. I hope you understand this. Okay, this is clear. Now the next essay is about the agreeing. Essay 210. Essay 210. It is about the agreeing the terms of audit engagement. It is just like marriage or engagement. Before marriage, we are confirming some terms that girl will cook for you. Okay, will always remain with you. Okay, will take care of you. Okay, so we are agreeing some conditions before marriage here. You can consider it as like this. Now, essay 210, agreeing to terms of the audit engagement. So it deals with the auditor responsibility in agreeing the terms of the audit engagement with management before start of audit, right? So there should be agreement between the management and the auditor. Whether this agreement is sent by the management to auditor and auditor gives confirmation. I am asking to you whether this agreement is sent by the management to the auditor and the auditor will give confirmation on this. No, that auditor will send to client for signing, not management. Remember this. Okay, these engagement letters contain the terms and conditions, the basis upon which audit to be performed. It contains terms and conditions that we need to confirm with the management before starting of the audit. Is it clear? Right. So how management appoint the auditor? Through the engagement letter that is sent by the auditor to client and client sign it, accept it. Okay, that letter named audit engagement letter. Okay, now there are some preconditions for an audit. Without these conditions to be fulfilled, auditor should not accept the engagement. Should not accept the engagement. Okay, so what are these preconditions for an audit? See here, to establish whether the preconditions for an audit present, that auditor shall determines whether the financial reporting framework is acceptable, on the basis of which, like AS, Ind AS, on the basis of which that financial is prepared, whether it is acceptable or not. First check this. This is the preconditions. Now, that management acknowledges and understands its responsibility for what? For the premise on which audit is conducted. We call it audit premise. Audit premise. So premise on which audit is conducted, or fundamental responsibility of management and TCWG. It means there should be preconditions. Number one is that auditor check whether that FRF is acceptable. Second is that management accepting its responsibility before start of audit. Only when this happen, then he should accept the engagement. accept the engagement. This is clear? Say yes. Okay. Now, what are the responsibility of management for which they are agreeing here? That preparation and presentation of the financial statement as per the FRF, including the design, implementation and maintenance of the internal control. That management will prepare the financial statement, also apply the internal control. Management accepting this responsibility here. Okay. Plus to provide the auditor AAU. A means access to all relevant information. Again, A means additional information if required. Then U means unrestricted access to persons within the entity if required. Right. To provide the auditor with the AAU, access to all relevant informations like records, documents, additional information if requested by the auditor from the management, and the unrestricted access to the persons within the entity here. Okay, right. These are the preconditions, management responsibilities, and the auditor check whether the FRF is acceptable. Only when these exist, the auditor should accept the engagement. Is it clear? Okay. The next is the contents of the agreement on terms of the audit engagement or the audit engagement letter, what it contains. Okay. So what is included in the engagement letter? That letter sent by the auditor to management for signing. So what matters this letter contain? See this practical example. This is the financial audit acceptance letter. Okay. There is name of address sender, date, name of recipient, address of recipient. Now, BOD, to BOD and dear recipient name. You have requested that we audit the financial statements of this year, which comprises the balance sheet, income statement, statement of change in equity means SOCI, cash flow statement means what is the scope of audit? What is the scope of audit? It contains the scope of audit. Then a summary of significant accounting policies, other notes. And we pleased to confirm our acceptance and our understanding of this engagement utilizing this letter, and our audit will be conducted with the objective of expressing the opinion on statements. What is our objective of doing the audit? Okay. Then we will give responsibility of auditor, responsibility of management, type of report to be issued, FRF apply. Okay. Scope of audit, objective of audit, responsibility of auditor, management responsibility, type of report to be issued, and the FRF to be applied. This will be included in this engagement letter. These are the content of the engagement letter. Right? Again come to magic book. See here. Auditor shall agree to the terms of audit engagement with the management or TCWG. That agreed term of audit engagement shall be recorded in the audit engagement letter. So it includes SORI. The terms and audit engagement letter contains the SORI. S means what is the scope, profit and loss account, balance sheet, SOCI, cash flow statement is the scope of audit. Objective is to form an opinion on true and fair view here. Okay, to form a reasonable assurance or opinion given on the true and fair view. Then responsibility of management auditor. By I means identification of the appropriate FRF, and by E means reference to the expected form and content of the report here. Okay, ठीक है. Now there is a questions. M Limited appointed the joint auditor X, Y and Z. It issued the engagement letter to all of them. M Limited appointed the joint auditor X, Y, Z together, and it issued the engagement letter to all of them. but Mr. X was not clear on the some points. So he requested M Limited to slightly change the terms of the engagement. This change will not impact the ultimate opinion. Okay, this change is not impact his opinion. So it is okay, no problem for that. That engagement letter contains the detail on the objectives and the scope of audit and the responsibility of the auditor. Okay, there is objective, done. There is scope, done. There is responsibility of auditor, done. There is FRF, done. There is form of report, done. But there is responsibility of management also. Responsibility of management also. That is missing in the given question. So what is discrepancy? It is the management responsibility. That should also be covered in this engagement letter. Right? Now, how to answer this? Explain the main point to complete. This one. Explain this point 100%. This one. Sorry. Okay. Contents of agreement on term of the audit engagement. In the given case, again, now copy paste the question. In third step, give the conclusion. Okay. Also give here a name of the essay, number of essay 210. Okay. Never forget this if you want to get full marks here. Now, give the conclusion. However, the engagement letter issued by the MEA Limited, okay, you can say M Limited, does not specify the responsibility of management. That is missing here. Okay, whereas essay 210, it should be specify the responsibility of management also. This is clear. So, content of the agreement on the term of audit engagement or audit engagement letter and what it contains. This is also a question. This is clear to you 100%? Okay. Now, come to next topic. In case of recurring audit, okay, first time when we apply for the audit, for the first time we are conducting the audit of an entity, we send an engagement letter. We send a engagement letter. Whether we need to send it every time for every audit? No. Okay, send it only for the first time for that entity. Next time it is required in these cases. So what are the cases? Please explain the circumstances that may warrant, okay, recurring audit, new engagement letter each time. When that circumstances that may warrant revision in the terms of the engagement. So what are the cases? That auditor may decide not to send the new engagement letter every time, send only first time, but these factors make it appropriate to revise the terms of engagement letter. In these cases, he need to send again the engagement letter. Again the engagement letter. In these cases, when the Lakhan and Reena son, this is our auditor, he is the Lakhan and Reena son. Lakhan and Reena son. Reena son. Okay. Lakhan and Reena son. He misunderstand the FRF. That auditor is the Lakhan and the Reena son. He misunderstand the FRF. So L, R, son, see here. L, R, son, misunderstand the FRF. These 7 cases here. Okay, let's read this. This is our memory technique to memorize these points. See this. So any indication that entity misunderstand the objective and scope, then in that case you need to send again a new letter or any revised terms of engagement letter. Okay, there is some more work assigned to him, then he need to revise the term here. Or there is recent change in senior management with whom he is agree earlier. Okay, now again need to send that confirmation letter. Or change in a significant change in the ownership, or significant change in the nature and the size of entity business. Okay. Now, earlier it was totally offline business. Now it is online business. Okay. Now, change in the legal and the regulatory requirement, and change in FRF. Earlier they are making as per the AS. Now Ind AS apply to that entity. So these are the cases when we need to again send the engagement letter. When the Lakhan and the Reena son misunderstand the FRF. This is clear to you. You can memorize using this here. Okay. Now come to the limitation on scope. See here. Limitation on scope. What it says. Before or at time of accepting the engagement, there is limitation on scope imposed by the management. Okay, there are two cases. That limitation on scope imposed by the management. There are two cases. One is during the means before or at time of accepting the engagement, means in starting, or change in terms after the acceptance, means after marriage. This is after marriage. This is during invitation for marriage. Okay, you can understand this like this. Okay, so before or at time of accepting the engagement, that limitation on scope imposed by the management. Before or at the time, this point is important. See here, if this happen, then in that case, if limitation result in auditor's disclaiming an opinion, why he should disclaim? Because he is not able to find the audit evidence to give an opinion. So he will give a disclaimer of opinion in that case on financial statements and do not accept. Okay, if that limitation result in auditor's disclaiming opinion, then in that case, do not accept the engagement unless required by the law regulations. Okay, say no to management. I will not marry. Now, but once you get married, later on, there are some limitation imposed by management. Changes in the term after the acceptance by the management. Now, what to do? There is also a question. See here. So, auditor, before completion of the engagement, is requested to change the engagement terms to one which provide a lower level of assurance. He need to obtain the reasonable assurance. That is around 90-95%, but he is getting around a lower assurance, that is around 50%. So that is not acceptable here. Okay, now what to do? Now we need to check whether there is a reasonable justification. If the answer is yes, then come here. Now accept the new engagement letter and perform the remaining work and issue the report as per the new engagement letter. Okay, now do a new marriage. Do a new marriage again with her. With management. Don't mention about the old engagement letter. Forget about the old marriage. Start your new journey here. Okay, as per new engagement letter. If the justification is not reasonable, no reasonable justification. Okay, in that case, changes result in the lower level of assurance. In that case, do not accept. If management agree, then okay. Okay, means withdraw here. It is saying that changes required by management, do not accept that changes. Okay, do not accept that changes. If management agree, okay. If management not agree, then in that case, withdraw from the engagement and inform to the government regulatory if required. This is clear. Okay. Now, here. there is a question also, that company has mentioned in the audit terms that they will not provide the internal audit report to auditor. By doing this, they are putting a limitation on the scope of audit, that they will not provide the internal audit report to the auditor here. Also impose some limitations on the scope, explain the preconditions before accepting the proposal. Also advise whether the CA should accept the proposed audit engagement. Okay, explain the preconditions, that check the FRF is acceptable, plus management accept its responsibility to implement the control to make the financial and provide the auditor with the AAU, access to information, racial information and the unrestricted access within the entity. This is clear. These are the preconditions. Now explain the limitation at time of main point 4a. Explain this. Note this. There are two cases. Under the given question, the limitation is imposed before accepting the engagement, before marriage, at time of invitation. Okay, so case A apply here. Explain the preconditions, then explain this A case, then give the conclusion. In the instant case, Mr. Ram should not accept the appointment due to limitation imposed by the management on scope. Okay, but it says not accept the engagement. So same is done by him. This is done. The next essay is about the essay 230, audit documentation. Understand this essay with a story. Okay, during my articleship, I have a senior article. During my articleship, I have a senior article. He want to take a leave. He want to take a leave. He called to principal that my mother health is not okay. Okay. So on that day he will not come in office. On next day he also not come in office. After that day, when he come in office, then principal ask him, why you not come in office for the last 2 days? Then he said, okay, this he said on the call, on phone call to principal, that my mother health is not okay. Okay, but after 2 days when he come to office, he said my own health is not okay. My own health is not okay. He forget what excuse he used earlier. Okay, excuse he used earlier. It means both time he is telling a lie. Okay, now when he come after 2 days, but our principal has a auditor mind. He recorded that call. And play and show him that he said his mother health is not okay. Okay, that principal document the evidence. So it means if the audit need to be documented, if the work not documented, it is not done. Connect this with the audit. You called to management as an auditor to get some clarification. Okay, that management gives you clarification. Okay, when later on there is some fraud found. Now you are saying I also call to management, and management saying management gives me clarification, given me clarification. That's why I did this. Okay, but that management employee is not agreeing now. And he's saying I have not talk with you anytime earlier. Okay, now because he is not documented. He is not documented any talk. So it means he has not followed SA 230. So he need to either ask him to send an email, not to talk on mobile phone, give that clarification by email, or the second point is to record that call. So it means he need to document that evidence in any way to show up as a proof later on, to show as a proof. If the work not documented, it is considered that work is not done. Work is not done. Okay, this is fault of the auditor. This is the responsibility of the auditor to document each and everything here. Okay, that is required. So we say work not documented is not done. Okay, see there. SA 230, audit documentation. So why it is so important? What is the meaning of this? It is the record of the audit procedure performed and the evidence obtained and the conclusion reached. What procedure you perform, what evidence you get, and the what conclusion you reached. It is documented. This is the meaning of the audit documentation. This is the commonly known as the working paper also. Remember this, that audit documentation include that audit program also. So what is the audit plan? Planning is just like you are planning, you need to, you are going to study for next 3 months and study 4 days FR, 4 days audit and 4 days DT, IDT like this. And what is the audit program? It is detailed plan, like on which day, which subject you study, which chapter you will study, for how many hours. This is the audit program. So audit document include this also. A checklist, what you are going to check, a summary of significant matters that arise during the audit, or the emails. These are just examples. This is clear. Now, what is the audit file? This can be asked in MCQ. What is the audit file? जिसमें हम डॉक्यूमेंट को रखते हैं, in which we contain the document. We call it audit file. Okay. Now, question arises whether the documentation should be done electronically or physically. Tell me. Both are allowed. Both are allowed. That documentation can be in both hard copy and soft copy. There is also MCQ on this. That documentation can be in both hard copy and soft copy. Both are allowed here. Okay. Okay. Now, what is the nature of audit documentation? Must provide for the sufficient and appropriate. It means quantity and quality of record of basis for the audit report. That documentation provide for the quality and the quantity of record of basis for the audit report. On what basis he formed his report, he should document that. And evidence that audit was planned and performed as per the ASEAN law and regulations. So he need to document everything that prove that he did the audit as per the SAS and the law and regulations. Okay. The next point is about the purpose of audit documentation. Why documentation? See here. Assist in planning and performing the audit. That audit documentation में audit का plan भी आता है. That audit documentation include the audit plan also. जिसमें कौन कब क्या करेगा लिखा होता है. It include when which work to be done by whom. So it include the plan and performance of audit. It help in planning and the performance audit. It include the audit plan. It include the audit program also. Detailed plan. It help in direction, supervision and the review of the work also while doing the audit. Okay. Now, to fix the accountability. What work assigned to whom, document it, and it helps in fixing the responsibility of that person. Now, record for the future reference also. This is clear. The next point is about the audit documentation होगा तभी तो उसका इंस्पेक्शन होगा, उसका क्वालिटी कंट्रोल भी हो सकता है. इसको हम बोलते हैं क्वालिटी कंट्रोल रिव्यू. We call it quality control review. If there is documentation, then there can be possible inspection or the quality control review. Quality control review. This review is done to verify whether that audit is conducted properly. Audit is conducted properly. Okay. You will study about this in the SQC1. SQC1. Okay. Conduct of quality control review and the conduct of external inspection. These points are important, but need not to memorize this. Okay. Need not to memorize this. Just read this. Okay. See this. This essay 230 is C category essay. Okay. Essay 210 is A category. Essay 200 is also C category for your exam purpose. For understanding, this is very much important. Okay. But for exam purpose, this is C category, 210 A category and 230 C category. Okay. We will mark every essay in class as ABC category. Now, this is C category. See here. Also, need not to learn this. Just read this. Now come to this point. That factors affecting in which form and the content and the extent of audit documentation required. Okay. That factor which influence the form, content and extent of audit documentation. In which form we should contain the documentation, in which content should we contain the documentation, in which extent, how much. Okay. What factors would influence the amount of working paper required to be maintained for the purpose of audit? These are the sunset in. Okay. Sunset in. From morning to sunset. Sunset in. S and sun, set, INN in. Sunset in. Okay. See here. So here AD means audit documentation. This is clear? Okay. Now, write the meaning above point 1. Before answering, write this point, its meaning, and essay number and essay name also always need to write here to get the full marks. Now, on these factors, it is depend in which form, which content and which extent the audit documentation should be done. Number 1 point is size and the complexity of entity. This affect the extent of audit documentation. Okay. The nature of procedure performed. Just take example. You are taking the evidence on the phone call. So in that case, you should record that call. Okay. The significance of audit documentation obtained. Now, you find a fraud. Now this document is highly significant. Okay. Now management try to destroy this evidence. So what to do? Keep it in soft copy and hard copy also. Also take print of 5 to 6 times. Also take print for 5 to 6 times. Also keep in soft copy, hard copy, and also take the print for the 5 to 6 times. That nobody can destroy this because this is significant audit evidence. Okay. So these factors affect the extent, form, and the content of the audit documentation. Which method you use and tool used for its collection and the timely preparation. You also need to consider the time limitation while documentation. Any Roman identified and the nature extent of the exception identified. Okay. And the need to be document a conclusion or the basis for conclusion not readily determinable from the documents of the work performed and the evidence obtained. See this line. The need to document a conclusion or basis. Okay, you should document a conclusion or a basis on which that conclusion not readily determinable from document. So you taken any decision that is not clearly identifiable from document या फिर evidence obtained. It means you use your judgment. Okay, that action is taken by you is not clearly revealed by evidence. Okay, you taken that action on your judgment basis, so also document the judgment also in that case. Okay, so sun set in, these factor affect the content, form and the extent of the audit documentation. Sun set in. Okay, now see this. Assembly of the final audit file. See this. हम साथ हैं नहीं, हम 60 साथ हैं, हम 60 साथ हैं. Now हम 60 साथ हैं. Why? That auditor shall assemble the audit documentation in a audit file and complete the administrative process of assembly file on timely basis within the 60 days after the date of audit report. He need to complete the audit documentation within the 60 days within 60 days after the date of audit report. This is the time limitation, last time. Okay, that is 60 days from the date of audit report. You need to complete this. After assembly, once assembly work is completed, then the auditor shall not delete or discard the audit documentation of any nature before end of its retention period. Means these documentation need to be retained for the 7 year. तो हम 60 साथ हैं. You need to complete the documentation within the 60 days from date of audit report and maintain in your record till the 7 year. Not delete and discard or documentation of any nature before that. Okay. Now, if auditor find any necessity to modify or add any new documentation after the assembly of the final audit file, that auditor shall document. Okay. After this time period, no change is allowed. No change in documentation is allowed. But in this case is allowed. When if you want to make the changes in the audit documentation, then you should record the reason for making the changes and why and by whom these were made and reviewed. Example for it is subsequent event. In that case, you need to change your audit documentation. The need arises because you are performing your procedures after the audit report date here. Okay. Then in that case, you need to document the reason, because these are the subsequent event, this is the reason, and when and by whom these were made and reviewed. Document this changes allowed in that case here. Okay. Need to complete the documentation within the 60 days from date of audit report and retain it for the 7 year. हम 60 साथ हैं. This is clear, right? Now the next is the ownership of audit documentation. That auditor is responsible to provide the access to working paper. This is important. See here. As per SQC 1, that asset 230 plus SQC 1 both says the same thing. Both says the same thing. Same is written under both. Same thing is written under both. Okay, see here. So that audit documentation is the property of the auditor here. Auditor may at its discretion make the portion of working paper. He can show his working paper to client or third party, provided such disclosure not undermine the validity of work performed and the independence. Okay, I am going to start my own practice, or soon I will show the real life working paper to you by just changing the name of clients here. Changing the name of clients, so that it does not undermine the validity of work performed and my independence also. Okay, so this is allowed. This is allowed. Can made available to client or third party in such a way that it does not undermine the validity of work performed and its independence also. In that case, he can use the same and share the same. However, if there is a request by the regulator to provide the access to working paper, now government is demanding the same. Now government is demanding the same because of any case initiated against the client. Any case initiated against the client. Now the regulator demanding the working paper, can we give them? It has to be complied after the informing the client. He can give that working paper to government also, but after informing the client, right? Therefore, it is the responsibility to provide the access to working paper to regulators, whereas it is at the auditor discretions, its own will, to make portion of working paper to third party or clients. In simple word, that documentation belongs to him. It is auditor property. Okay, to regulator he can give, but after informing the client. This line is made. To regulator he can give, but after informing the client. This is the auditor property. Okay, see here. There is a question, but it says that audit document, auditor responsibility to provide the access to working paper to regulator or third party. So first explain that auditor should not provide access to working paper to third party without specific authority unless there is a legal and professional duty to do the same. Now explain this, then explain the clause 1. This you will study in the ethics chapter, ethics under GST. There are a lot of clauses are given. Okay, now just read this. Clause number 1 of part 1 schedule 1 to CA Act 1949. It states that chartered accountant in practice shall be deemed to be guilty of professional misconduct if he disclose the information acquired in the course of professional engagement to any person other than his client without consent of his client, otherwise that as required by the law. If he do so, then he will be guilty. Okay, essay 200. Overall objective of independent auditor means UYA CASA. Auditor shall respect the confidentiality of the information obtained and not disclose the third party without specific authority unless there are some legal and the professional responsibility to do so. So different topics here. Essay here, this says something, this says something, and essay 230 and essay 1 says something. Okay, you need to quote everything here. Okay, start with this first point, second point, third point. First this point, then clause 1, then essay 200, then explain this 4 point, then explain this 4 point, these 4 point here. This should be answered. Okay, in this case they are asking whether the auditor can provide his working paper to regulators. The answer is yes, but after informing the client. If he do so, then he will be guilty. Okay, informing the client. Okay, this is the main answer here. After informing the client. Therefore, that auditor responsibility to provide the access to working paper to regulator after informing the client, whereas it is at his discretion, its own will, to make the portion of working paper to third party or client. But he need to provide the documents to regulators, but after informing the client. This is clear. Documentation of compliance with the essays. Okay, that audit team member wish to document every matter concerned. That audit team member saying that we will need to document everything. But in your opinion, neither necessary or not practicable to audit the for auditor to document the every matter. You are saying that in your opinion, it is not necessary and not practicable to document every matter. You are right. That client and that team member is wrong. Okay. Further, you feel that it is unnecessary for the auditor to document separately the compliance with the matter for which compliance is demonstrated by documents itself. Okay. For these matter, need not to document again. Need not to document again. So what are these matters? See here. SA 230 audit documentation required that auditor should document the evidence that audit compliance with the essays. However, it is not necessary and not practicable. This line is correct here. Okay, this point is totally correct. It is not necessary and nor practicable for the auditor to document the every matter. So these are the matter like existence of documented audit plan. Demonstrate that auditor has planned the audit. You need not to document it separately. Document it separately. While doing the audit, you made a plan. Okay, so it's automatic get documented. You need not to document it separately. Existence of the signed engagement letter in the audit file demonstrate that auditor has agreed a term. Again, you need not to document this separately. When you are doing the audit, before audit, you have sent a engagement letter that is signed by the management. Okay, this documentation is done at that time itself. You need not to document it separately again. They are talking about here. Auditor is a report containing the qualified opinion. Demonstrate that the auditor has complied with the requirement to express a qualified opinion under the circumstances specified by the essay. So if he is giving a qualified opinion, it means he has complied with the requirement of this opinion before giving this opinion. Okay, and need not to document the same again. Need not to document the same again. In relation to requirement that apply generally to of the audit, that be number of ways in which the compliance with them may be demonstrated within the file. Okay, example of these are that there is no single way in which the judgment, in which the professional skepticism is documented. So this is documented in many ways and need not to document every time. That the engagement partner has taken the responsibility for the direction, supervision and performance of audit as per the essay may be evidence in many ways in the documentation. So you need not to document it every time. Okay, do it once while doing this and need to document at every time. Okay, so it's not possible to document everything and not practicable. This is clear. This is a special question and also asked in the exam by 22 for 5 marks. Okay, see it here. In FR, in AFM, in DT, IDT, mostly questions come from the study material, RTP or new question frames. But in our audit, questions come from the study materials, RTP, also new less frame. But that exam questions also repeat. Remember this. In FR, AFM, DT, IDT, there is less chance to repeat any question again that has come in earlier paper. But in audit, there is high chance that question will repeat, that exam question will repeat, so never ignore this. Okay, where it is written that is it exam question by 22, it is not RTP, it is not MTP, must not ignore this, must do this. Okay, there is high chance to repeat in exam. Okay, this is clear. So goodbye, remaining we will cover in next lecture. Okay, so goodbye.